1 month, 2 months.
Hello, good evening. Please activate for me to
Good evening, sir.
screen. Yeah. Oh, okay. Now it is available. Yeah, you are able to see, right?
Yes, sir.
Yeah. We can start?
Start, sir.
Yeah. Just last class, I was telling you about the note on discontinuing operations. Okay.
Okay.
See,
Okay.
this is the, we had seen the P&L statement where how we are showing the profit from discontinuing operations and tax thereon, how it is adjusted to and taken to total. See, actually here what we are doing, we are not showing the income and expense of discontinuing operations. Rather, we are only taking directly profit or loss here, and we are taking the tax on that discontinuing operations, and total figure we are taking to balance sheet. Okay, but as far as balance sheet is concerned, as per accounting standard 28, they say don't disclose anything on face of the balance sheet, show it in the note. Okay, so in the if you come to the note which I told you that I will show you today, see, this is the note on discontinuing operations. Okay, so this particular note we have given what we are selling, what is the area, whatever it is, the data is given here, that which unit is getting sold and all, and the P&L breakup is given here. See, this income from discontinuing operations net of tax is 163.03. Before tax it is 238.04. This 238.04 only we have taken here. Okay, 238.54, not 04, 238.54. Okay, this is with respect to P&L. Coming to assets, see, cash flow also is shown here, cash flow of discontinuing operations. And next, coming to assets classified as discontinuing operations. These are the assets we are selling, and these are the liabilities we are selling. Okay, so this net assets is so and so amount. Okay, 12,687 lakhs is being sold in this particular, that means 126 crore assets are being sold in this particular transaction. This is how it has to be disclosed. This should not be disclosed on the face of the balance sheet. Okay. Now we will move to LLP financials. I am just sharing, 1 minute. See, this is the extract from guidance note. See, as we discussed when we have started this section of the our training, that wherever it is companies are involved, then we are following Companies Act. Okay. Now, though LLP is also coming under companies, this thing, the format has been prescribed by guidance note. So this is the format which is downloaded from guidance note. Okay. So I have not taken entire guidance note. Okay. I have taken only the format. So these pages pertaining to the format. So same like name of the LLP, balance sheet. Now here, because it is LLP, partners funds and liabilities. Okay, so partners funds, partners capital account. Okay, again capital account is divided into contribution. I mean partners contribution means capital, partners current account, reserves and surplus. Next, non-current liabilities, long-term borrowings, deferred tax liabilities, other long-term liabilities, long-term provisions. Here again, you have to give for 2 financial years. Comparative has to be there. Okay. So here also, if you want to give, you can disclose in rupees, or you can disclose in any nearest rounding off like 100,000 lakhs, whatever you prefer, like. Okay. See, format, it is more or less like same format. Current liabilities, short-term borrowings, trade payable, other current liabilities, short-term provisions. Next, total liabilities. Next, assets, non-current assets, property, plant and equipment, and intangible assets. In that heading, PPE, intangible assets, capital work in progress, intangible assets under development. Okay, if there is any intangible asset is being developed. Okay, technical know-how. Okay, and B, non-current investments and deferred tax assets, long-term loans and advances, other non-current assets. Next, current assets, current investment, inventories, trade receivable, cash and bank balances, short-term loans and advances, other current assets. So next, brief about the entity. So usually, I do not know if you have done any LLP. You are supposed to give all this, like how will you give accounting principles and all policies. The same thing you have to give. Like if you see in companies, this thing, two will be accounting principles, policies only, always. Here also they have maintained the same. Note number 2 is accounting policies. One is brief about that this is the LLP which is formed on so and so date, and they are into the business of so and so things, like that. Okay, same which we give in company also, that in company was incorporated on so and so. This is the 15th financials of the company, like that we mentioned. The same thing you have to follow here also in case of LLP. Okay, now coming to statement of profit and loss for the year ended. Same revenue, operations, other income, total. There is no change. Okay, same as it is, company format only is prescribed by institute also for LLP. Cost of metal consumed, purchase of stock in trade, changes in inventories of finished goods, work in progress and stock in trade, employee benefits, finance cost, depreciation and amortization, other expenses, profit before exceptional items, profit before extraordinary items, and then extraordinary items. Next, profit before remuneration to partners remuneration. Okay. Usually what we do, we more or less show LLP also like partnership firm. So please don't do that way. There should be a comparative figure in case of LLP, definitely. In partnership firm, if you don't give comparative figure, it is okay. But for LLP, it is required. Profit before tax, tax expense, current tax expense, provision for excess or tax provision if there is an excess or shortfall has to come here, deferred tax benefit. Next, profit for the period from continuing operations. See, the same thing is followed here again. Discontinuing operations, profit for the year, accounting. I am not getting into more details, which we have discussed all these things. You see here, now if you see this one.
Little bit, can you zoom, sir?
Okay. Yeah, I will zoom it. See this, I am not able to rotate it because this PDF doesn't allow to rotate now. Yeah, you understand, it has to be paid this one, then only this, I think. Yeah, it goes for payment.
Okay, sir, no issue. No.
Yeah. So just bear with me. Yeah, you are able to see right now?
Hi. Yes, sir.
Yeah. See, here they have shown, I will little enlarge further. See, I will share this anyway in the group. Here they have shown in a columnar way. that name of the partner, share of profit, opening balance, capital introduced, remuneration, interest, drawings, share of profit or loss for the year, and closing balance. Usually we do it in a vertical form. Here they have shown it in a horizontal form. That is the only difference. Otherwise, this is regularly what we do for partnership firms. The same thing is being shown here. And here they are saying current account. So there is a fixed capital and this is a current account, partner's current account. Now coming to next note, that is reserves and surpluses. Same like how we used to follow capital reserve, revaluation reserve, other reserves, undistributed surplus, balance from statement of profit and loss. See, here you have to remember one thing. In some cases, if after LLP has been come into existence, many private limited companies have converted themselves into a LLP. Okay, because the compliance aspect. See, here you need not have very board meetings, all these things. Of course, you have annual return here also, but it is not as complex as a private limited company. This minutes compliance, ROC compliance. Here, the compliance aspect is comparatively lesser than a private limited company. So when they have converted to LLP, so they try to make it fixed capital to the extent of share capital, and if they have valued their shares at a premium, then they have brought that difference amount into capital reserve. Okay, all these things have been done. So this capital reserve is very important as far as LLP is concerned. If you are going any audit for any company, I mean any LLP, then you have to see where from this capital reserve is coming. Okay, whether it is coming because of conversion of a private limited to LLP, or is there any sale of assets and it has come capital reserve, something like that. You have goodwill, or if they have purchased any entity and it has resulted in capital reserve. So you so what will happen is then you will understand more clearly what was the actual transaction. Okay, next, revaluation reserve. If they do at the time of conversion, they would have done revaluation of fixed assets also before conversion. Then they would have converted for tax purposes, whatever maybe the reasons will be there. Okay, then undistributed surplus, that is closing balance of P&L, which usually this will not come here. Why? Because what you do every year profit, you will distribute to partners. Okay, here the undistributed surplus, usually they don't keep it that way. Anyway, it will be distributed if at all it is there. You see here share of profit or loss for the year is already distributed, right? So mostly here it will be zero only. If at all it is there, you have to mention here. Next, same borrowings. Okay, secured and unsecured, term loans repayable on demand. More the same company format only is maintained. There is not much difference. Only thing difference is you here you have little lean. Exception to stringent notes and all, notes to accounts. Okay. Secured, we have seen. Now unsecured, loan repayable on demand, which are unsecured. Deferred payment liabilities, loans and advances from related parties, long-term loans, other loans and advances. Here, nature of security. See the same thing. What we give in nature of security, how much has to be repaid, terms of repayment, all those things. Or if any guarantees are given for those loans by directors, partners. Of course, not directors, partners. Okay, so those things you have to mention here. Next, coming to deferred tax liabilities and assets. And so here again, for whatever reasons the deferred tax is being arising, those breakup is given here. Same way like how we give in companies also. Other long-term liabilities, advance from customers, if anything other than that can be specified in this note. Next, provision, same provision for employee benefits, other provisions, trade payable. Again, you see here very important MSME, right? You have to give those MSME breakup. Okay, there is no aging here, but you have to give breakup and you have to provide for interest also. There is no exception for LLP. Okay. Other than MSME, disclosure relating to suppliers registered MSME Act based on the information available with the entity company. Amount remaining unpaid to any supplier at the end of each accounting year, principal and interest. This breakup has to be given. Amount paid or paid, amount of interest paid by the buyer. Same, this table which we have discussed. I told you, right? The same table I was telling you in company also, which we have seen in that example also. They have made a table. The same table is coming here as a note. Okay. See, 5 points are there. The same 5 points is available even in company also. Other current liabilities, current maturities of finance lease obligations, interest accrued but not due on borrowings, interest accrued and due on borrowings. Okay. Now fixed assets. You see the format whichever they have followed in that example company balance sheet which we have seen, they have followed the same format. This particular freehold land, in columns they have taken the assets and in rows they have taken the changes. I mean opening balance, additions, deletions, closing balance for previous year and current year. So this is the format they have followed in the company's this thing. Now same thing for intangible assets. In that company we had seen only one intangible asset, okay, software, and here they have given the format for with various items of intangible assets. Okay, same format for intangible assets. Now capital work in progress. Okay, in the intangibles under development. Okay, opening balance, additions during the year, capitalized during the year, and closing balance. Whatever you have capitalized here will go and sit in the assets, and balance will be continuing here. If it is completed during the year, then you will deduct that money here and you will take it to the balance sheet in the, under assets, additions to the assets during the year. Okay. Now coming to assets aspect, other than after fixed asset, investments, non-current and current assets we have to, current and non-current we have to disclose. Trade investments quoted, other investments, very similar to company's format only. There is no exception. Okay. The same thing we have discussed during schedule 3 division 1. Okay, trade investments unquoted, other investments, aggregate market value of the C, aggregate quoted investments, unquoted investment, the same format. There is no change here. And footnote 1, details of investment in a partnership firm. Name of, suppose if this LLP has invested in any other partnership firm, those things has to be disclosed here. Current investments, same again with the same breakup. Valuation note. Capital advances, which we have shown capital liabilities and capital advances also in company. The same way here again, if it is doubtful, you have to adjust the doubtful amount. Loan advances to partners, like how we used to report there to directors, the same way here partners. Other loans and advances, prepaid expenses, advance tax net of advance tax at source, net of provision for income tax. Senvat credit receivable, VAT credit receivable. This VAT anyway it is not there. If at all it is there other than GST items, then it can be shown here. GST, security deposit balance with government authorities. Capital advances, again it is unsecured one. If anything doubtful has to be adjusted. Okay. Now inventories, same thing, whatever we have discussed yesterday only about inventories. Next, trade receivables. Trade receivables secured considered good, unsecured considered good, doubtful. Okay, outstanding for a period less than 6 months. Here you do not have that aging, only 6 months and more than 6 months. Okay, Unlike like a company, here you have only that leverage. Cash and bank balances. Again, we have to mention here, note if any margin money, you see here deposits with original maturity for more than 3 months but less than 12 months as on the day from reporting date, margin money or deposits under lien. The same thing here again, what we used to report under Companies Act. Okay, other current assets. This is an all-inclusive heading which incorporates current assets that do not fit into any of the above categories, asset categories. Interest accrued but not due on deposits, interest accrued and due on deposits. Now coming to a statement of profit and loss. It is revenue from operations. Everything is same, no change. I don't want to read out again because yesterday only we have seen this. Here inventories at the beginning of the year and differential amount. We have discussed this increase and decrease. This increase negative, reason being I told you yesterday also, increase being negative, reason being today you have incurred certain amount of work in progress, out of which you are taking to inventories, balance will be debited to P&L. That is why it is increase in negative. Okay. And employee benefits, finance cost, depreciation and amortization, other expenses. Okay. So this is more or less the same format like companies only. Okay. Now I will quickly show you company's balance sheet in Excel, how I prepare so that it may give some value to you. Okay. It is taking little time to open because a huge file. Give me 2 minutes.
Okay, sir.
What I suggest, one thing, whoever prepared, suppose if you are going, even you have prepared last year, don't just carry forward last year, whatever you have done. Just put your mind what should be the format, how it has to be reported. Okay, see, sometimes if I myself am doing the same thing, it doesn't mean it is perfect in all respects. Okay, I have to see what are latest developments, how other companies are reporting. Okay, you can see public limited listed companies, how they are reporting. Okay, so definitely you will learn. See, big four and all, if you see, their reporting will be totally different. Okay, so every year before you take up the audit, okay, see, we start audit July, somewhere like that. Okay, so you can, before that, before you start the audit, before audits and reports will be out also. Okay, so just go through once whenever you are in leisure, just go through and see what best you also can do in your reporting. Because ultimately, whatever balance sheet we are giving, it is going to the bank, it is going to lend other lenders, okay, and maybe some investors, fine. So our firm name will be, if somebody sees how nicely he has prepared, like that, they should feel it. So that is my suggestion. Okay, now I will share this with you. It is open. You see here, this is the balance sheet. Fine. If you see in my Excel, I maintain computation of total income, IT depreciation, ICDS working, data, whatever backup working is required for computation of total income, net assets, fixed assets transfer, deferred tax working. Okay, now here we are reporting in rupees in lakhs, correct? Some people, what they do, they make two sets of balance sheets. One is rupees in rupees, another set is in lakhs. See, why you need two sets? Because for ROC filing, you have to give complete number, correct? And for income tax, you have to give full digits numbers, correct? So it should be available, definitely. What I do here is, whatever this gray area is there, you make it in rupees, and you link all your groupings and all to this only. You see here, if you see in the formula bar, this is coming from BS notes, balance sheet notes. Okay, so balance sheet, you see, I don't want to get into individual sheet because the company name will be visible. Okay, see, balance sheet notes is there. Balance sheet notes, liabilities, balance sheet notes, assets, PL notes, okay, related party transactions, ratios, okay, everything, other notes, everything is mentioned here. And if you further see, further breakups will be working, cash flow working, ICD, I mean intercorporate deposits working, okay. There is, with respect to this particular year, there is some BTA, that is business transfer undertaking is there, okay, that working, debtors working, everything, one Excel if you open, whether I am working in this company or not, if somebody opens this, okay, if he invests 1-2 hours of his time, he will get all 98%. 2% I will say, okay, it is not, somebody has to explain him. Otherwise, 98% information will be available in this Excel. See, breakup of expenses also, legal charges. The auditor will ask, give me breakup of professional fees. Okay, give me breakup of legal expenses. Security deposits received from customer. Okay, security deposit to vendors, other expenses breakup, advance to creditors. What are all the advances? Because why you require this? Because see, when you, even if you see in tally also, you will group all creditors under creditors. Some creditors show debit balance, some creditors show credit balance. When you see the balance sheet, it will show you net of both. But in financials, as per Companies Act, advances you have to report it separately. You cannot net off under liabilities, right? So who will remember which vendor tomorrow? Even tomorrow, assess income tax officer will ask, give me the breakup of this. Then where will you search? Fine. So all these things, if you maintain in same Excel, it will be easy for anybody, whether we are in the company or not. Okay, whoever is, even if you give to your income tax department, see, the big companies will have their tax department separately, indirect and direct tax department, indirect tax department. So whenever they need, if you just share your financials, they will get all the information from here directly. Okay, so this is, if you see P&L also, see what I have done, I have taken the full values in the gray area, which will not come under printing here, and I have given the formula here as rupees in lakhs to here. Okay. Okay, here it is hidden. I will unhide it. Okay, you see here now, if you see the formula here, J17 divided by 10 to the power of 5, that means 1 lakh. Okay, J17 whatever is there, that I have divided by 1 lakh, so that all the figures are in rupees lakhs. Okay, and if you see here, it is all connected to this particular notes. and that notes will be connected to, if I go here, this note will be connected to trial balance. See, these figures will come from trial balance. This is share capital, that's why it is like that. Okay. You see here, all these things that my trial balance name is grouping TB, trial balance. That means in trial balance itself, I have grouped it. You see here how I have done bank OD, short-term loans. What I have done, I have divided my trial balance as per my schedules, as per my balance sheet. So that when I am linking the figures also, it is very easy. And all my previous year figures is also linked. It is not typed manually. It is all linked. Okay. So when you do this, suppose if your client gives you a trial balance, okay, you need not check opening balance only if you link even your previous figures with respect to your previous year trial balance. It will automatically that yes, your opening balance figures are being checked like that it is. Understand? If you keep typing the numbers, then then you have to definitely check your last year, I mean opening balance, trial balance again. Okay, anyway, even if you check, what will happen is if they have done any adjustment between one group to another group, all this will come out when you are directly linking your trial balance. I mean, when you are linking your financials with the trial balance, either for current year or previous year. Okay. You see here also I have given the same way. This is the full values and this is the rupees in lakhs. Here we had, as I have taken the same companies continued and discontinued. Okay, that is the reason we do not know what auditor says. That's why what we have done, we have kept it ready. Suppose if he says, no, I want to show continued and discontinued on the face of the P&L, then I am ready with that also. Okay, but as per accounting standard 28, it should not be reported like this. It should be reported profit from discontinuing operations 233.98. So we have hidden this two columns. So only one column is being reported for current year. Okay, so that's the reason these two columns are hidden. Otherwise, the formula would have come here only directly, that this figure divided by 1 lakh. Understand? And I will show you one for LLP also. Yeah, I think you are able to see now.
Yes, sir, continue, sir.
Yeah. You see here, for this is a LLP, okay? Okay, I am not showing the name, but it is for a LLP. Okay, partners capital account balances, fine. And reserves and surplus. If you go and see partners capital account balances, as I said, this gray area is not for printing, it is for converting the rupees into lakhs. Okay, so if you go to partners capital, then you have all these partners, 5-6 partners, their balances. Okay, you see here partners fixed capital, and here partners variable capital. Okay, like that. Here also again various columns, I mean rupees columns and rupees in lakhs columns. Okay, if you want to do it in hundreds, you can convert it into hundreds, divide by 100. That's all. And here also same thing is maintained from balance sheet to notes, from notes to trial balance, like that. Okay. Some adjustment entries will be there where we have to punch it like this, advances and all. I told you that will not come directly from trial balance. Otherwise, all workings will be from directly from, if you see here, TB modified. Okay. This is maintained in tally. So we have to do modified TB. Okay. So that we can link the numbers easily. So it should always be linking only. It should not be direct punching of numbers. Okay, if you are punching the numbers, then you have to be very careful whether your TB is correct or not. And you see accounting principles note is given here. Okay, though this is LLP, it has been given. Okay, it has to be given that way. Cash flow, working cash flow also is maintained for this, because tomorrow, if suppose this is going into again converting into private limited company, okay, then what will you do? Then you will need to prepare all these things, and you have to take previous year figures also there. Okay, so that's why you have to maintain the same standard so that it will be helpful for anybody at any time. Either it may be in assessment or it may be to the company for in case there is any conversion from LLP to private limited also. And another important one thing is that suppose if this particular LLP is going to in consolidation with a company which is again in Ind AS, then you have to prepare Ind AS balance sheet of LLP. Okay, that you have to be careful. Though LLP it is not applicable, but if it is going in consolidation, suppose in the example whatever I have shown, there is a company which has invested in this particular LLP. Okay, I mean a company is a partner in this particular LLP. If suppose that company is going to be a going to prepare the financials in Ind AS, and this LLP is going to get consolidated there. See, if it is an investment, then only investment in partnership firms value will be taken. Suppose it is going in consolidation, then all the numbers should be in line with that parent company wherever it is going into consolidation. So you have to be careful, and you have to prepare that Ind AS related financials also for this particular LLP. Okay, so with this we will conclude today's class, and in next class we will take up the accounting standards. I have circulated one review kind of that this thing Google form, so I made it little more easy for you to easily fill the, I mean yes or no questions only, so you can take it and do it. And next Monday, we will have Monday, Tuesday and Wednesday next week. Please inform your HR also, because Friday I am not available. So we will have class Monday, Tuesday, Wednesday instead of Monday, Wednesday, Friday in next week. Okay, anyway, I will put her a message also. Please, you also inform. Okay. Thank you. Thank you.
Thank you, sir.